What is up, degenerates? It is Thursday, October 23rd, and do a little different today. We'll go over distributions, of course, or declarations that were made today. But I got a comment. Big shout out to Sean, RI5XC, who is new to this type of investing, wanted a little bit of a crash course. What we're buying, what we're selling, how they work, that kind of thing. So we're going to do that. We'll keep it short. We're degenerates. We have no attention span. I am on X at DivDegenerates. So check it out there. I'm in there a lot. So I asked Grok, what are option income ETFs? They are exchange-traded funds that generate high yields, typically 7 to 100% annualized, and we got some paying much more, so we love those. They use option strategies, primarily covered calls or cash-secured puts. They don't own the underlyings in general. They have a synthetic position where they buy a call, sell a put, and that mimics the underlying that they're trading on, say Coinbase or NVIDIA. Then they sell covered calls for income, and as long, out of the money, as long as the price of, say, NVIDIA doesn't get to those strike prices, they expire worthless, or they buy them back after, for cheap and generate income. They pay from that income. Some do cash secured puts, which is a little different. Yield Boost does credit put spreads where they sell a put, buy another put further out of the money to protect it on the downside. As long as the fund does not go, or the underlying does not go below what they sold the put at, it's income and it expires worthless. So they do it on underlying assets like stocks, indices, or ETFs. They aim to deliver regular income, often monthly or weekly. Most of them are weekly now. Through option premiums, appealing to investors seeking passive income. These are not growth funds. Do not buy any of these if you think you're going to buy it at 10 and a week later it's going to be at 12. They do that sometimes, but usually it's going to go from 10 to 9, but it's going to pay you $1 in income. However, they often come with higher risk, including NAV erosion, which, I don't like that term, but that's what they use. And they are capped on the upside. So if NVIDIA goes, from whatever it's at to $1,000 a share, you're only getting the income from the calls. You're capped. Some of them are a little less capped, and we'll get into that. But that's compared to traditional dividend or bond ETFs. And we talked about covered calls, cash secured puts. So that's the gist of it. But do a lot of research on what these do. I pulled up all the websites of the funds we cover. We cover REC shares. We don't do their covered call ETFs because they're lower yield. As you can see, 25. They're great yields. FEPI, AIPI, and CEPI. I don't cover those, but I do cover their growth and income. They have better yields, and you can get growth. They only sell covered calls on half of their positions. So if the underlying goes way up, then you're not completely capped on the upside. We do cover those. COII on Coinbase is the underlying. MSII is MicroStrategy or Strategy. They own a ton of Bitcoin. NVII is NVIDIA. TSII is Tesla. So we'll look. I'm going to close these so there's no interference with the video. And we'll look at REC shares. I created this spreadsheet. I got into these just this January 2025, and I made a spreadsheet. It's over, I think, 112 different funds now. And the reason I got into YouTube is because no one covers all of them all the time. There's great YouTubers out there. I watch all of them, but no one covers all of them all the time. I do, because I want to know what's paying the most. So anyway, these are REC shares. I don't own any of these because, like I said, they're lower yielders. The Tesla one is at 75% yield. It's fantastic. But again, I'm a degenerate. I want 100% or more. But anyway, today was a green day, great day. Yesterday, the last couple days have been just bloodbaths for all of them. They track the underlying. So any rec shares as an average was up 1.88%. The underlyings were up 1.39, so they captured 35% more than the underlyings. So that's good. Like I said, they're not as capped. They use a little bit of leverage. The next one is YieldMax. They just changed their website. Pretty cool. And they've got the most funds that we cover. They have single stock. They have baskets. They have a Mag 7 funds. We cover all of them except the month. There's still a couple of monthly ones that just try to pay 12% annually to protect that NAV price, which it does, but not interested. They also do inverse funds. For example, they have Tesla. They have Tesla, which does covered calls on Tesla. Crash is short Tesla. I don't own any of the short ones except Fiat, which is I own Coney, which is a Coinbase covered call strategy. I also own the inverse, Fiat. They both pay. So it's not quite a one-to-one hedge, but and as you can see, they're paying 105% yield, and it's dirt cheap. It's like $2, if that. Winter, same thing. An inverse on MicroStrategy. So check out these websites. You learn a ton from those. And of course, subscribe to the channel and watch my videos. So that's YieldMax. Let's look at YieldMax on the spreadsheet. There's a ton of them. Today, as a whole, YieldMax was up 0.82, and the underlyings were up 1.33. So they captured 61% of it. They're capped. It's just covered calls, and a lot of these really, really went up today. What was a big one? Robinhood was up 5.59%. Hui, which is the YieldMax fund that does covered calls on Robinhood, was up 5.05. So they captured 90% of that. Not bad. And you'll see when they go down, they capture less of the loss, for the most part. Carvana was up 4.63. Carvani, which is YieldMax, was up 4.52. Anything else stand out? GameStop was up 5.16. The YieldMax fund up 2.62. So they were capped there. It went up too much too fast. Circle was up 4.06. Circo, the YieldMax fund, was only up 1.12. So the underlying went up too fast, blew through the covered calls, and they got capped. But we'll take it. We're getting income. These are income funds. So the next company we cover is Defiance. And we cover their leveraged income ETFs. So they try to capture a little bit more than one-to-one. They have a bunch. I'll go over those in the spreadsheet. Just another, there's plenty of competition. I look at all of them. I own a lot of them. If they're blue over here, I own them. And YieldMax, I own a ton. I own Babo on Alibaba, Coney on Coinbase, YMAG, which is a basket of the Mag 7, Murni, which is on Moderna. That's a dirt cheap one, $1.67, and it's paying 77% yield. Misty, which is on MicroStrategy, Plady on Palantir, Fiat. That's the inverse for Coinbase. I own both the Coney and Fiat, so they kind of hedge a little bit. And the yields are just amazing on these. These pay weekly, every week. These are annualized yields, 50 based on 52 payments a week. But the highest yielder, as of right now, is Robly on Roblox. It's a new fund, and they've paid weekly payments. They were monthly, so I had to do some calculations to convert it to like what a weekly payment would be. This is their first weekly payment, and it's 75 cents. Averages $1.02, 111%. So that's the new winner of YieldMax. It was Misty, and Misty's still great. So that's YieldMax. We talked about Defiance a little bit. These are their funds. The only one I own is IWMY, which is they do covered calls on the Russell 2000. That one of my first funds. I tested the waters. I bought YMAX, YMAG, IWMY. You know, the safer ones, the index ones or the basket ones, not the single stock ones, because I didn't know. You know, you read on Google and Reddit and all that what a scam these are, and how they can't pay that. They're going to go to zero. I've been doing it 10 months. I'm making bank. I will show you that in a little bit. Bank for me. There's people making tens of thousands a month. I'm not there yet, but I will be, because I am just reinvesting all the distributions back into the funds, adding more money, buying new funds, and I'm loving it. So the next one's Yield Boost. That's Atlantic Shares. They do credit put spreads on double leverage single stocks. We're waiting on a fund of funds where they own all of them. It's like a basket, so it's a little diversified. But two new ones, BBYY and FBYY. That's Meta, and BBYY is Alibaba. They've been trading for 2 or 3 days, and they declared a distribution today, and I will get to those because those are amazing. Let's go right to that. I own 3 of these: COYY, which is a double leverage Coinbase, TSYY, double leverage Tesla, and NVYY, double leverage Nvidia. Green Day. As a whole, they were up 1.31%. The underlyings were up 2.34%. Like I said, these are capped because they sell a put, they get a premium for selling it. If the underlying goes up or stays flat, they just keep the premium. That's the income. But if the underlying goes way up, they're still stuck at that premium that they sold. So that's when you see a big day like that, they're capped. ROBN, which is the double leverage Robinhood, was up 10.98%. HOYY only captured 4.63%, or was up 4.63%, which is 42% of the capture. SMCX was down 17%, but because they buy that protective put, they were only down 5.74%. SMYY, the Yield Boost Fund. So they're captured on the upside, capped on the upside, but a little bit protected on the downside. So as a whole, the annualized yield is 101% of these funds. COYY, 165% yield based on the last 3. They declared today. X date is tomorrow, so you had to have bought it today to get the last distribution, which is paid Tuesday. These all have different, declaration days, X days, and distribution days. It gets confusing, but just keep learning. Their last payments were 49 cents, 42 cents, and 38 cents, so it went down, but it's every week, and the price is only $13 a share, $13.72. TSYY, 21 cents, 20 cents, 20 cents, 142% yield. HOYY, 69 cents, 60 cents, 57 cents were the last 3, 144% annualized yield. SMYY, which is the Supermicro computer, is the double leverage Supermicro computer, SMCI, 69 cents, 69 cents, 64 cents, average is 68. That's 150% yield. So you get my drift. They have 2 new funds. In fact, let's look at those on the chart. BBYY, which is Alibaba, double leverage Alibaba they trade on. 3 days of trading. Launched at 24.81, closed at 24.84. You'll see there when they first start, they're all over the place. But they only paid a distribution after 3 days of trading. 46 cents, 96% yield. Then they also launched an FBYY, which is Meta, Facebook. It's funny, they all stick to the FB ticker, even though it's been Meta for a while. But look, that's up. That was up big today. So 3 days of trading. They declared a 23-cent distribution, which is payable Tuesday, to 48%. The lowest yielder. But look at that, 48%. Where else can you get that? They average 101. Income Blast. A little disappointed in that one. Let me close that one. In fact, let me close all these. Income Blast. They have two funds. ITK, which does... They're different because they do zero data expiration covered calls. They sell them in the morning. They close them out before the close. So you're not as capped. If it goes to the moon that day, you are. But, a lot of these funds do weekly expirations. So, the market can turn on them. This is 1 day of capture. They just launched TK, which is a MicroStrategy 0 DTE covered call ETF. Now you might wonder, you can't trade 0 DTE every day on Strategy or IBIT. They can because they're institutional. So they do at Flex Market. I forgot what they said. I saw an interview with their CEO. It was great. But anyway, ITK had a disappointing distribution. They've only paid 4 times now, weekly. Their first payment was $1.50. That was like a 297% yield, which has now been removed because they only averaged the last 3. Then it was 50 cents, 30 cents. They declared today 15 cents. Average is 31. The yield is now 73.74%. Was in my top 10. I'm sure it's going to be off of my top 10. I do that video Sundays. I don't know if I'll do it this Sunday because I'll be on vacation. But we'll see. Anyway, so that's the only one. MSTK just started trading. Let's look at their chart. Yeah, 1 day. Today. Open at 25.32, closed at 25.30. I imagine they'll have a declaration next week. We'll keep an eye on it. They have a ton of funds coming. I've listed them here and waiting for them to launch. And I've already got the underlines in and everything, so we're ready to go on that. Next is Roundhill. They have a ton of funds that we track, and just various underlyings. They do have now a fund of funds, which basically just owns all of the funds, so it's a little diversified. And let's see, it's called WPay. 1.74% today. They are averaging 77% yield. Not bad. That's not bad at all. And then they had a green day. Their best yielder is HOOW, which does covered calls on Robinhood, 137% yield. They've got COIW, which does covered calls on Coinbase, 122% yield. They've got a lot of 100%ers, a lot of degenerates. MSTW, which is a MicroStrategy, 115%. PLTW, which does covered calls on Palantir, 109. TSLW, covered calls on Tesla, 100%. Even. Nice. And then let's look at Bitwise, the last one we covered. All those are weeklies that we talked about. Bitwise is monthly. They did declare today. X date is tomorrow. They pay Tuesday. and then we got to wait 4 to 5 more weeks. It's monthly, not 4 weeks. But had some good ones. IMST, I own 3 of them. My number 1 in my top 10 was ICOI. Their distribution did go down to, they paid $5.16, $4.79, and then $3.93. So it's trending down. The average is $4.63, 176% yield. IMST, which is on strategy, 140% yield. They also went down from 375 to 288. IMRA on Mara, 386, 289, then 301, went up, 108% yield. IGME, which is a GameStop, they do covered calls on GameStop. They paid 256, 320, and then 277. That is a 97% yield. That's their worst one. So they average 130% yield. These are, of course, annualized yields. But I buy the degenerate ones. I never sell. And I'm going to get to that. So we covered Bitwise. Bitwise, you can go to their website. Go to these websites. Check them all out. See, you got to love the strategy that they employ. A lot of them are covered calls, which I love. You are capped on the upside on most of them. You got to love the underlying. They don't trade on penny stocks, but it's on big cap funds, big cap stocks. So, and you got to love it. And this is a Snowball Analytics. I use this to track my holdings. There is a free version where you can just have your portfolio in there, but I actually have the paid version, which is I think $6 a month. If you pay for the whole year, it's like 60 something bucks, which I did. So I've only got $10,000 invested. Again, I started this year. I'm putting in about $1,000 a month of my own money. The value is higher than what I've put in, and everyone says these stink. You lose your money. I'm making money just on the growth. Again, that's pennies, but it's up $1,000, 3.1%. But passive income, 150.94%, and they predict the next 12 months $22,000 in income, and I'm just reinvesting all of it. Now, that's if I don't reinvest any of it. The next 12 months, I'll make $22,000. I'm reinvesting every payment every week. I get paid 4 days a week from the various funds. I will show you the ones I own. It's got today's gainers, today's losers. TSYY, my largest holding, was up 2.87%. The SIMC was bad, down 9.18%. Fiat, the inverse on Coinbase, was down 0.57. You get the gist of that. But let's go over my holdings. This kind of shows you what your dividends, your distributions, they're technically not dividends, they're distributions. They are paying from the income that they make on these funds. It shows my future payments, $22,000, $1,800 a month. That's going to go way up. Every month it will go up. This is what they've actually paid. Remember, I started in January. I made $11, and I was thrilled because I saw the potential. Keep reinvesting, keep putting in some money. I made $42 in February. I made $284 in March, $318 in April, $931 in May. May was because May had 5 weeks. So you got and Coney at the time was my biggest holding. That's the Coinbase Yield Max fund. That paid twice because they paid every 4 weeks back then. Now it's weekly, but they paid every 4 weeks, and there happened to be 2 payments in May. So you see the $931 I made there. Then $619 in June, $994 in July, $1,042 in August, $1,238 in September, and so far in October I'm at $754, but that will beat the $1,200 because we still have what, 2 weeks? Well, a week and a half. So I'm not worried about that. Dividend growth, you can see that it's just pretty much growing. And so that's that. I want to show you the portfolio though. I've never sold any of these. I will probably sell one or two at the end of the year, just to rebalance. But this is what I want to show. My biggest holding is, this is by my largest holdings, current value. TSYY is my largest. I put $4,600 into this one. It's only worth $3,500, so it's down $1,095, but it's paid $1,700. So the total profit for the year is $670. That's a 14% yield. So you say they're not growth, it's growing. So that's the biggest one. Coney, my second, I put in $4,700. It's only worth $2,800, down $1,900, but I've received $2,100 in distributions, and I'm reinvesting them. So these will all this red will turn green. Again, this is not financial advice. Do your own research, talk to a financial advisor, but that's it. YMAX, my third biggest. I was buying that from the beginning in January, my beginning. I put in $3,000. It's worth $2,700, so it's only down $338, but it's paid $479, and it pays every week. And again, I'm reinvesting, and I'm gonna just stack these shares. iKoi we talked about. That's my fourth largest. I put in $3,000. It's only worth $2,600, which is down $430, but I've received $253. So upside down on that one, but I'm not complaining because it'll come. And that's not counting what was just declared today. That will go into my account Tuesday. Tesla, I only have $575 in that. That's the Yield Max fund. It's worth $583. It's worth more than I put in. So it's only $7 worth, but it's paid me $278. So that's the gist of it. We can go through all. I own 19 of these now. Never sold one. I may sell one or two at the end of the year just to rebalance, move the money into a better fund. So I haven't decided yet how I'm going to do that, but I'll talk about it when I do. Anyway, that's the gist. If you have any questions, leave them in the comments. Check other YouTubers too. I watch Retire on Dividends every morning, and he gets into the nitty-gritty of the trades. What they're each fund. He covers Yield Max. Tomorrow he's doing Yield Boost from Granite Shares, which I'm happy he's doing that because that's my largest holding is in Yield Boost. So anyway, there's a bunch of them. They all have a little bit different strategies, but I like all of them. And if you're in it for growth, these aren't for you because, like I said, this is a red. They're down more than I put in, but the distributions are higher than they've gone down. So I'm all in. Anyway, have a great Thursday. I'll be traveling tomorrow. We're doing a long weekend for our 25th wedding anniversary, which was actually Tuesday. So it's 25 years and 2 days we've been married. And but we're just doing a long weekend. Don't know what I can do as far as content. I'll try to do at least a top 10 on Sunday, but no promises. But make sure you subscribe, hit the little bell, turn the notifications to all, and then you'll know when my videos will come out. Anyway, have a great day. Thanks for watching. I will see you in the live chat. I'll premiere this at 7:15. It's 6:30 now. Anyway, have a great day. We'll talk then.